What's up, guys? Is there a golden state to form your next limited liability company in? In this video, I'm going to give you my top 5 states to form an LLC and what you need to look out for when it comes to setting up your next limited liability company. All right, let's get started. Okay, so when it comes to forming LLCs, I know there's a lot of opinions out there, but what I like to look at are several different factors. More importantly, I want to know about the asset protection feature of that limited liability company because I want to make sure that if my business gets sued, they're not going to be able to come after and reverse, veil pierce the company and sue me personally, as well as if I get sued individually, they can't take my company from me because it takes a lot of effort to go out there and build up an asset base or generate a business. And the last thing you want is one mistake ripping that away. At the same time, I don't want to have an LLC set up where the government, the state government that is coming in and taking all my profits. So I need to be aware of both the asset protection laws and the tax laws of these various states when it comes to setting up an LLC so I can make sure I'm creating an LLC that works for me and not against me. Well, here's what I've done. I've put together a chart of all 50 states, and I'm going to show you what that chart looks like. And at the end of the video, I'll show you how you can get this chart. You can download it, and it has a ton of information that you can use in forming your next limited liability company. All right, let's go over and take a look at this. So here's what I did. I went through and I put down all the states, and as you can see here, I've kind of color-coded these things out. I've got blue, green, red, and white. And the way I look at it when I'm forming a limited liability company or picking the right state is, first off, as I stated, I want to have asset protection. And so when you see a green line here, or a green state, really what that's referring to is that state offers the best asset protection, and it probably offers you the best when it comes to taxes. That is, there is no taxes, state taxes in that particular state for that limited liability company. Now, if it's red, it means that it does not offer asset protection. I call those bad states. Blue states, they offer some asset protection, but not all the way. And again, I'm going to break this down. And then the white states, it's a little unclear where you're going to be there. Maybe it's good, maybe it's bad. It depends on the court. Okay, so what are we going at here? Well, first let's talk about asset protection. So when we look at asset protection, what we're looking for when we're setting up an LLC is we want to make sure that the state law offers charging order protections. And so if we're thinking of the colors here, the green, the blue, and the white states, as you see here on the chart, they all offer charging order protections. Now, what does that mean? It means that their state statute reads that a creditor of a member, that is me, a member of my own LLC, if I'm involved in a lawsuit and someone gets a judgment against me, that creditor's only remedy is to obtain a charging order. And so a charging order means that if they sue me and they have this judgment against me and they place it against my LLC interest, then if I choose to take out a distribution, pay it out to myself, I have to pay it to my creditor until that judgment is satisfied. Now, some states go further and they state, well, if there's a judgment against a member and that does not pay, meaning the creditor's not getting paid, then they can foreclose on that interest and take the interest or appoint a receiver to control all the distributions, hence the word bad. So when we're looking at states to form our LLCs in, we want to find those states where the charging order protections exist in the state statute. That's key. But it's even better if we can find that the charging order is the exclusive remedy, meaning that the court cannot offer any other remedy to a creditor of a member. Now that wording is important because in these white states, the statutes will read that the charging order is the remedy for a creditor of a member, but it doesn't use the word exclusive. Now the reason why that's a problem for you is that there have been some court decisions that have held if it does not have the word exclusive in there, then the court can award foreclosures or other remedies, that they're not bound just by the statute itself to state that the creditor doesn't get paid. The creditor can have other options. So I look for the word exclusive. You want that in the statute. Now, if we want to make sure it's even more protected, then we also want to look for those states where it has charging order language, it has exclusive language, and it provides for single member LLC protections. Now, this is really important because I get this question all the time. I talk to so-and-so, or I watch this video, and they say single member LLCs offer zero asset protection. And I always tell them, you don't know what they don't know what they're talking about, because many or a few state statutes specifically protect single member LLCs. So if I have a single member LLC where I'm the only owner, it has charging order protections and it has the exclusive remedy in there, hell, there ain't no one that's going to take my LLC from me because the state law doesn't allow it. Those get my green badge. So that's how I've broken this out. And so as you can see here, when you go through this, I've listed out all the statutes. So these are all clickable links. I'm going to show you how to get this spreadsheet at the very end of the video. So what we have here, is you'll see, is Alaska. That's one of my top 5 states when it comes to setting up LLCs, because it states that the charging order is the exclusive remedy. There are no other remedies available to a creditor, and it has protection for single member limited liability companies. It does not allow foreclosure, which means that you can take someone's interest from them, and it does not have a tax on the limited liability company. So we've got Alaska. We also have Delaware. Although Delaware does have a franchise tax there, it's de minimis if you're not actually conducting business in Delaware. We can scroll down here. The next one is, of course, going to be Nevada. Nevada's the same way, single member LLC protection, charging order the exclusive remedy. It does have a commerce tax, but again, if you're not doing business there, or you're under, I think it was $1 million or something, it's not a bad tax. So it's not enough to take it off my list. And then Texas, of course, is going to be a great one as well. Franchise tax isn't really a problem. It's de minimis for LLCs. But here's the thing, Texas now offers single member protections. This just recently changed. It was signed into law this year. So in Texas now, they recognize via statute that single member LLCs are protected. That now made my list. It never used to be on there. It is there. And then, of course, you hear me always talking about Wyoming. Charging order exclusive. It has a single member language, of course, and it has no taxes. So my top 5 are what I just put out here. We have Wyoming, we have Texas, we have Nevada, we have Delaware, and we have Alaska. And if I was putting them together, the way I would do it is I'd go Wyoming, Delaware, Nevada, Alaska, and Texas, or Texas and Alaska, basically the same. Now, that being said, okay, what do I mean then by the blues and the whites if we're looking at this? So when you get this chart and you download it, these other states that are in blue, they state that the charging order is the exclusive remedy. So that's really good to have that language in there, that it is the exclusive remedy. So if you get sued, a creditor can't take your LLC from you. But the statute does not protect single member LLCs. It means it does not specifically identify that. So that's why it's not at a green level. Now the white ones that you see up on here, say Georgia or Arkansas, those guys, I mean, they recognize that the charging order is a remedy or for a creditor, but they don't go further. And they leave it open by not including the word exclusive. So there I'm kind of, hesitant to make that recommendation. And the other problem you're going to have is taxes, of course, over here. So these are all clickable links. You can click there to see the tax rates on these on limited liability companies in those various states. So that's another problem that I have, and that's why they don't make typically the green list if they have a high tax on their companies. Now the red states, those states, I mean, that's just stay away from them. Do not be a member in a red state limited liability company. So let's assume that I was looking to set up an LLC in Colorado, okay, because I own Colorado real estate. Yeah, that's what you can do. Set up your Colorado limited liability company, but don't own it. Take your Colorado LLC and have it owned by a green state LLC. Now, some of these green state LLCs, the other reason why I like them is because certain ones will offer anonymity. So the Delaware LLCs or the Wyoming limited liability companies give you anonymity. So when you set up those companies, you don't have to disclose anything through the state. So that makes it provides you even more protection as well. So if I was setting something up in Colorado, I know it doesn't have charging order protections as the exclusive remedy. So I'm going to have my Colorado LLC owned by my Wyoming limited liability company. Therefore, I'm picking up the anonymity. I'm picking up the charging order protections of Wyoming, because if somebody sues me, they can only get what I own, and I do not own that Colorado LLC. So that's taken away from my personal creditors, and I don't have to pay any taxes on that income that flow through that Wyoming limited liability company. So When you're trying to determine where you should set up your limited liability company, you should still consult with a professional about this. But keep in mind, asset protection is really important. Do not own LLCs that are in the red columns, because if you're involved in a lawsuit, you're most likely going to lose that limited liability company to a creditor. All right, guys. Hey, I told you can get this list. Check out the link above. Click on that card. It'll take you where you can download this sheet right here. You can use it in planning your own limited liability companies. Use this chart, walk you through it, figure out what's most important to you when you're creating your next LLC. You like the video, make sure you hit the like button. And again, if you're not yet a subscriber, now's your opportunity to subscribe so you'll get great content like this delivered to your inbox as soon as I release it. Take care.